Man, oh man, it's been a little while. It's been a little while. Oh, I know people are like, what's going on? Blah, 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 blah. I mean, to be honest with you, a lot of people should just kind of seen the writing on the wall. Um, this, again, was an anticipated move, something we discussed, something I talked about. And, anybody who DM me or messaged me, I did respond in a conversational piece and said, hey, we're looking for a bounce into resistance and rejection, right? That's what you're looking for the whole time. Again, build short structure, you know, the down structure is a good indication of reversal back up. A build long structure is a good indication of a break down at some point, right? At some point. We did play the bounce. I think we played it really well, right? Really, really well. This is 2022, and I posted this on basically on here on December 28th. And I said, this is likely what we're going to see here. So we've seen the move into resistance. Again, another build long structure, right? Not build short. We move into resistance, and then we get the breakdown move directly after. So we basically built up into resistance. Now, granted, we didn't quite hit resistance, unfortunately. We came just shy of resistance. Again, that marker was basically 100K, is what I was discussing with you all last time we spoke. And then from there, I did discuss too when people asked me like, "Hey, when are you taking profits?" I said, "Is roughly in the 100K range on my longs. My longs printed really well. I think I did almost like I think like an 8x or something like that on my long positions, and they did really well. I got out with about I'd say 80% because I scaled out of my longs as I was going up. I did eat about 20% to the downside and got liquidated on that 20%, but it's not a big deal. I didn't lose much at all in comparison to what I won on that move. Um, just obviously reaching for a little more, scaling out slowly as we went up. And the expectations were, ideally that we would get into that breakout, into that breakdown position. This right here was my post right here also on December 22nd, where I was showing that this is likely going to push up toward the high before it comes back down to the low. And you can see right here where I was showing the high end resistance to the low end support. And you'll see today, we'll discuss it on the charts, kind of where that support is and where that resistance is. Am I playing Roblox? I don't see where Roblox is on my computer, but no, I'm not playing Roblox. Uh, so you got your low, high, low, low, high, 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 low, and then low, high. So with that being said, that's kind of what we ran into on the charts. We'll discuss it, like I said, in just a moment. And this was more or less the discussion that I was basically showing people here that was going to kind of play out, right? And I did highlight the range that you wanted to look for Bitcoin support and resistance both. Support obviously being all the way down here, resistance obviously being up here. And then if you pull up the chart here and you take a look at the chart and you run it on, again, on the monthly, I think the monthly is just the easiest time frame for most people to understand. You'll see basically from my discussion, they basically pushed into the high, right? A swing long into roughly a swing short. So this is why you wanted to scale out of this position. And why I said, like, if you wanted to be bullish, you had to flip this range, right? You had to flip this yellow range right here. It's roughly about 103K is that yellow range. If you weren't able to flip this range, then it wasn't going to turn bullish. You had resistance all the way down. You have support all the way down. And now you're sitting on support. So you're catching a bid slowly off of the support range. I think we came down to hit roughly about 76-ish. Can the market go deeper? We'll discuss that too. What is the market direction overall? So just like this move here, a lot of people are going to be talking about this occurring. It's not the same situation as this. It likely won't play out like this, like most people are anticipating. But I will show you what's likely, right? We'll discuss what is likely, because I think that's kind of more important than discussing 30K, 20K, whatever, right? Give me $100, please. Yeah. So if we look at it overall, you basically got a structure that's been pretty much stopped out, right? So you had 1, 2, 3, 4, 5 months before you broke down. 1, 2, 3, 4, 5. And then you had the breakdown on the 6th month, Then you had the build long structure, which swung hard. This basically liquidated all the shorts, trapped a bunch of longs that thought they were going to get the breakout. And then once they got the move up, they then did what? They liquidated the longs. Now, this is what I've been discussing, is that there will be a trap set even if the market was anticipating to go lower. And that's why I told a lot of people, don't short below 90K. 90K was that marker. 90K is likely what got a lot of people liquidated too. Keep that in mind. Anybody who shorted below 90K likely got liquidated in this move up really easily. And so with that being said, basically, where are we pressing at? Where are we at right now? We're pushing into the lower end range, right? So you got your low end range right here, and you got your high end range right here. This was your shoulder rejection. We didn't quite get all the way there, but we got pretty high, right? So we got some nice prints on some longs, and then we got the blast down, right? The slam. This is where the market slammed us down even more, and they pushed us down into the low end range of the current market. Low end range being right around in here, right? Now, can the market go lower? Of course, it could go lower. We'll discuss that too here in a minute. How low will it go? What's the likeliness, and so on and so forth. We'll talk about all that. You have 1, 2, 3, 4, 5, 6, 7, 8 months of consolidation in this range. It's going to be, in my opinion, very difficult to break below this range. I know a lot of people are going to be reaching, telling you 30K, 20K. They're going to be telling you you're going to fill all this gap. No, it's very unlikely. This gap to me is very much like this gap right here, right? And you can say that this filled that, but this happened before this drop, right? So typically, if something like this is going to get filled, it's going to get filled somewhere relatively while you're still remaining in that range. It's not going to be filled after you've broken out of the range. Typically, once you've broken out of the range, this just stays, right? And you could say technically it was filled by the wick here too. Again, just, if you're going to fill a gap like this, you're going to do it atypically before you break out of the range. So now that we've kind of done the same thing over here, this, is very similar to this. This is very similar to this. And the market created structure in between, right? This right here, this portion fills this gap, right? That's basically the way we have to look at it. We have to look at it like this portion right here, this consolidation range right here fills this gap. This gap doesn't need to be filled. Doesn't need to be filled. I know a lot of people are going to tell you 30K, 20K, blah, blah, blah. And then they're going to pretend that they never said these things after. But the likeliness is that we're likely closer to a bottom than a top. Now I'm going to show you on the RSI also, you'll probably already see it, why that's the case, as well as the consolidation range. Again, we got to look at this as a square, right? This is a square consolidation. Price broke out, price broke back into that square, right? And then it shifted away. Again, another square consolidation range, right? Price broke out, price is breaking back towards that square. So likely, if we're going to get a bottom, I'd say the lowest, maybe we could violate this a little bit, maybe hit like 57, 63, but that's the lowest I would see markets going. I wouldn't see them going much lower than that. And currently we're at 76. So, another 10K down basically. And if we look at the drawdown here for Bitcoin, you're only looking at 20% max from here. Now, from the high, obviously, it's 51%. Now, a lot of people are going to be talking about 80% drawdown, so on and so forth. I'm going to kind of refute that a little bit with market structure, right? And I'm going to show you kind of why that's likely not the case. And likely this will be the norm moving forward. I think the drawdown that we're seeing right now will likely be the norm. Again, that 50% versus the normal, 80%, 90% Bitcoin drawdown. So if you look here, it's 77%, and you're probably like, well, how did it go from 77 to 50? Again, we'll talk about that. So the part that we have to understand with charts, right? We remove all that, is when you get a parabolic move, you get a parabolic retrace. We'll just call it that, right? It's really what we call a flush in trading, but we'll call it a parabolic retrace. This is a rebalance, right? Hype break into rebalance. Now you're probably like, well, it started down here and went all the way up here. No. That's actually not the case. The case here is it started right around here, right? This is where candles just went up only, and then retrace back down. Now, typically you can get 50, 70, 80% drawdown, but you only need 50, right? You only need 50 of a drawdown. And that can technically fill all the gaps. You don't need 100% drawdown to the entire breakout structure. This technically is the breakout structure. See the candle differences here? These candles are small, consolidated, right? They're consolidated as they go up. The candles don't start getting crazy until you go here, into here, into here, into here, and then you get the big retrace back into the range. And again, you get big candle breakouts here. So anticipation is if you're going to break this range, you don't want to revisit down here. So what does the market do? It pulls it back and then starts to structure again, and then here, and here, and here, and here. And then we see retrace into here, again, trap liquidity, and a push all the way back down, basically rebalancing the breakout range, right? Now, a lot of people wanted to see a move all the way back to here. What was the drawdown we discussed? The drawdown we discussed is not a move all the way back to there, right? The drawdown we discussed is a move from there to what? 70 to 80% max typically. And what do we see for the drawdown? 77%. You're not going to get 100% drawdown. So the breakout range is technically, where this starts is where you're retracing back to, but you're only retracing about 70 to 80 max and all the way up to 50, right? 50 is the norm. So 50, 55 is what a normal chart will look like. That'll be the max that you'll see in a bear market on drawdown. So you got basically a 77% drawdown. Now, here is not the same as this. It's not the same. Because what do we see here? Well, we see God candle, rebalance, right? And you didn't just rebalance there, you rebalanced here too. And then you see God candle, you see slow moves up, then real God candle, rebalance, right? Then big God candle, sideways move, and then little God candle, rebalance, right? You're coming back to fill the candle. That's essentially it. And now that you're kind of already there, it's like, where do you go from here? Again, the discussion of where we go is basically you can come back to here. That's a possibility, but likely not lower than that, right? Likely not lower than that. And that will bring you back into your previous high also. Again, just another thing that kind of happened here. If we look at it from the previous low, right, and we drag that across, we just barely breached into the previous high of the previous market. If we hit this low here, it'll bring us just barely into the previous high of the previous market. Use a discussion piece from that, right? And that brings us to like 59, 60K. Like I said, like 58 is like the most I can see. That's why people are telling you like 30K, 20K, like it's very unrealistic that that's going to be the case. And that drawdown will put you right around 50, right? That'll put you right around 50 for here, 53. So I'm not really bearish here, although I think you can get a discount, but it's the same thing when I told people over here in basically when we were bottoming here in 2022, I told people in this range, start to bid, right? And those people made a killing if they started bidding around that range. And I would tell people again, where we are from here, doomers and gloomers, in this range, start to bid, right? We're there. You could get lower for sure, but your drawdown to breakout is huge, right? Let's say your average is sitting around here, right? Let's say your average is sitting around here. You did all the bids through this range, and your average is sitting around there. Your upside through that was 435%. And I'm giving you the high average. I'm not giving you the medium average, because if you bid down, your average should technically be around there, right? Which would try to put you closer to 500% gains. So basically, we're kind of in that same scenario right now where if you just, and I'm not saying go all in, but you have to have the mindset of whatever money I put in could sit there. That's the way you have to look at it, because you're likely going to be sideways for some time, right? And then as that sideways kind of plays, eventually you'll get that market breakout, and this will start to occur further up. This scenario right here, in addition to that, too, if we look at the monthly, this is huge. This was something I was looking at. We never got the parabolic market move here, right? We missed the high by a lot, 1, 2, 3 tries, and continued to reject up here, right? Reject up here. So this was actually a bear div forming at the high. I missed this, completely missed it, but I did play the bounce beautifully. That did work out for me. And sometimes you have to do that, right? Sometimes you miss a move. You gotta take the bounce if you miss the move. So obviously missed the move up here to the dump, and then took the bounce, made up a lot of that loss. And basically, now we're diving back down, and I'll be able to get a discount range where I can bid in again. So if you look at RSI, something else that's kind of matching here, right? RSI kind of matching. You're very close, to bottom of market. Now, I wouldn't take RSI and angle it technically. I would just take it flat and try and find where it hits all this and say, like, if you want a really good bid range, let RSI come into this green line, right? Let RSI come to that green line. And you'll see here, like, we're not even going to look at the chart. We're just going to kind of put some markers here, right? So here to here and here to here. And then we're going to open the chart, and you'll see these kind of signified the low, right? The puke into the low, into the breakout range until you broke out over here. And that was from both sides of your bottoming range. And then over here again, and keep in mind, if you say you bought high here and you're over here, even if you bought high there, your upside potential was still, roughly about 977%. So even if you bought just before the puke, you still had a lot of upside here. So don't get into this mindset that we're going to be in the bear market for a year or this or that. And because that could be the case. Like I usually look at it from like 8 months, especially from now at most. But if you're going to be averaging anyways, does that really matter that much? No, you're just kind of averaging into this low, because nobody's going to be able to catch the exact bottom. It's very unlikely. If somebody does, it's typically luck, right? But you want to bid into the low end range. So again, just bidding into the low end range, and that's going to give you parabolic gains. So essentially, again, we're into that low end range. RSI, not too far from the low end line here. And likely we're going to come into this and then catch a bounce out. That'll start the bull market again. It's just, this year is not looking too fantastic. But on this front, right? But we're going to talk about some things that do look good, that could flip things up sooner than we think. And that's basically oil and dollar, right? So you want oil down, dollar down to get good gains. And you can see here, this is something I talked about today with the BB boys and girls. And I basically discussed with them. And I said, hey, now might be a good place to short oil. And I know a lot of people are going to be like, oh, no, blah, blah, blah with oil. Look, all this crap's topping, right? This spike in oil is not bullish. And I'll tell you why. You're basically bidding into high time frame resistance, right? Support, 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 resistance, resistance. Over here, it's a little shorter, and support over here, right? So this, to me, is high time frame resistance. You're already showing rejection. This is what we call a retest. That's what that's called. Retest once, retest twice. You're continuing to form lower high structure. Oil looks like it's about to fall off a cliff. Other scenarios that are pro for oil prices going down, again, the Venezuela stuff is another thing that could cause oil prices to go down. In addition to that, you can see the deals with the Saudis. That could be another reason for oil prices to go down. There's a lot of reasons for oil prices to go down, good or bad. I mean, I'm not going to get into politics of the situation. I'm just telling you why, right? Why these prices may come down. And oil to me is heavily tied to dollar, right? So if you put oil and dollar in the same room, they're basically the same thing. We call it the petrodollar. A lot of people tend to forget this. I don't know why they forget this, especially the older guys. They should know that saying of the petrodollar. And so if prices are going to come down, likely dollar value should come down. And dollar value comes down, asset prices go up. So you could end up in, I think, like a lull for a little bit, which is basically where dollar's trying to rebalance and plays kind of sideways for a bit. And that causes asset prices to stay suppressed. But the minute dollar starts puking, you're going to see assets start to jump because money's got to go somewhere, right? And if dollar's losing value, it needs to gain value somewhere else. That's why the stock market tends to run when dollar is losing value. Because if you're rich, let's say you have $100 billion and your $100 billion is worth $100 billion today, but in like 2 years, it's going to be worth $80 billion, not due to, we'll say the value of the 100 billion, you still have 100 billion, more due to the purchasing power of the 100 billion, right? It's about purchasing power. And if your purchasing power goes down, then guess what? Your value of your dollars go down. And so how a lot of rich people offset purchasing power decreasing is they typically buy assets, right? Which increase. So $100 billion goes to $120 billion. And that $120 billion has offset that $20 billion difference of purchasing power, right? And so now that $100 billion is still worth $100 billion. This is why you see a lot of investing in the assets, because they basically have to offset for purchasing power differences. And purchasing power right now is still not the greatest. That's what people aren't understanding. Like, people would think about it from inflation, deflation standpoint, but it's just purchasing power. That's all it is. Like, is your dollar worth the same value for the same truck you could have got 5 years ago? They can make whatever excuses they want for the value of the truck and say, oh, well, we added all this tax, so it's worth, $30,000 more for this truck. But at the end of the day, it's not. It's just they added a bunch of extras to try and pretend like the value is more or worth more, but it's all the value in a vehicle is in the motor and transmission. It's not about the tech. The tech is just like a cherry on top. It's just extras. So again, just going into the conversational piece, if the oil is about to go down, I would say roughly I would be looking for like $50 a barrel. $50 to $45 a barrel is what I'm looking for oil. A lot of you are like, well, who cares about oil? It's an important piece of the pie when you think about it. I think in that aspect, well, here's the thing. Like, we just talked about Bitcoin being closer to a bottom than a top, right? Like, what do you buy? You buy things that you think are going to gain value in an environment that's about to ramp up, right? We're kind of in the bell curve of the ramp up. So we're kind of in the low end bottoming portion of the ramp up. So we're kind of like down here, if you think about it from that aspect, right? So you were in this trend, and now you're kind of like in here somewhere, about to ramp up. So you're still kind of in the bottom. That's where we're at right now. We're not breaking out of this range right at the moment. We're going to kind of sit here. Purchasing power is going to continue to put pressure on consumers and so on and so forth. But I think over time, as dollar starts to lose value and you start to see assets blow up, it's going to kind of rebalance that purchasing power to a degree. Because if these companies continue to ramp up in value, then what you're going to see is you're going to see people's pay go up and so on and so forth. People be able to do more jobs. Gig economy starts to pick up a bit. The gig economy has really been the biggest disappointment of all for me, because gig economy has only gotten more stricter, on top of the fact that, if you look at the gig economy overall, it's kind of struggling right now even through the current economy. A lot of people thought the gig economy would keep the flame ignited in the economy, but I feel like it's kind of fallen over with the rest of the economy. So it kind of sucks. And when I say gig economy, for those who know or don't know, talking about like your Ubers, your Lyfts, all those side gig economies. Those are even suffering in the current economy right now. The economy is not as great as people think it is. Like, it looks great on paper, but consumer wise, it's not that great for consumers. So again, dollar wise, let's discuss dollar. So it's usually like a 10-year average, right? For dollar. So we can see right here, you reach your peak, you fall over, 1986 collapse, bottoming structure, move back in, right? And then we move into the 2000, right? You get your 2000 collapse, which happens right over here, .com bubble, boom, come back down, 2008 collapse at the low, boom, come back up, 2022 collapse right over here. I mean, it's almost timed perfectly for decades. You get your 2022 collapse, and then you get your roll down right here, right? I think the dollar is going to lose significant value in the coming years, like big time. Not great for the dollar, not great for purchasing power, but eventually this thing's going to bottom, and we're going to get a 2008 style type situation. So just keep that in mind, right? Like, I honestly think things are going to get worse before they get better. I'm really in that boat at this point. And I don't mean like asset wise, right? Like I'm positive on assets, because if the dollar is going to lose value, assets are going to gain value. So the only way to beat the current purchasing power issue is to come in and be asset heavy, right? Or look for assets to buy. We'll talk about assets to buy too. We'll get into that discussion. But I'm just trying to explain the overall and kind of my thought process, so everybody kind of gets on the same page here. I think dollar coming down is really good for assets, but really bad for consumers. So again, the only offset is to purchase assets. Pepe, AVAX. Yeah, well, I never really saw the point in AVAX, to be honest with you. Near, I would say you're closer to a bottom than a top, to be honest with you. Like, if you've already held to this point, it's not going to hurt to hold more. And we'll take a look at those charts too. I'll throw those charts up, and we'll take a look at them and see where they're at, and then I'll kind of give you a better gauge on that. I haven't looked at AVAX or Near in a while, so. And I'll take a look at Pepe. I think a lot of these meme coins, they eventually bottom at a certain point, and then they get these little small rallies here and there. They give you, like, I would call them almost exit pumps. Take those opportunities when they come. Yeah, for sure. Yeah, we'll talk about it. All of them here shortly. But yeah, Dixie looks like it wants to come down big. Like I said, oil is hitting into resistance, in my opinion, meaning that it's likely to come down big. Oil, $50 a barrel. Dixie, I think, like, going into this next year, we'll probably see 88 cents on the dollar. That's how much purchasing power you're going to lose. The purchasing power is going to get bad. And I think that's why metals ran, but I'm also bearish on metals right now. I'm very bearish on metals. I think gold, like, is the most obvious top, right? I mean, you got a pretty much a blow off top move right here, and then you're starting to cool down from that, and likely you're going to cool down into this range. And you can see here, here's this fractals from here, right? You cool down into a range, and then eventually metals just lose steam. That's atypical of metals. So, like, I think, like, this is kind of the scenario that we're running into right now with metals. And then even silver, I was looking at that earlier today too, and silver looks, that one looks rough. I think I got it on here. Let's see. Silver looks really rough. I mean, this looks bad. That's the biggest rejection candle I've seen in some time, man. If they can't pick that up on this monthly and it stays closed like this, I think you're coming down big time. Silver looks like a freaking trap. I mean, this is a Bitcoin market style blow off that looks like it's coming right back down. I mean, anybody who sold here, you're basically break even. You didn't really miss anything, right? The people that bought into this, like, look. This is silver right here. I can't I can't make this any easier. It's literally the same move. Look at this. Look at this. And then where does silver go from there? All the way back to the beginning. Look at this. You're gonna come all the way back to $30 an ounce. This is insane. This is insanity. And people are telling you to bid this shit. Like, this is not the stuff you want to buy. Don't buy metals. It's literally the gold, silver, none of that shit. Like, I wouldn't buy any of that. Silver looks pretty bad. I don't know what copper looks like. I'm not gonna sit here and pretend to be a metal advocate or like I'm some kind of metal expert. I'm not a metal expert. I'm a chartist, right? And from a chart perspective, these things look bad. They just do. I don't care what no one tells me. It's like, dude, like this is not it. Yeah, let's go with this one. Copper futures. Bro, who's bidding copper futures? Yeah, I mean, even copper. I mean, again, just this one's tough. You might be like in here, right, with a little bit more run left, but like, let's look at the upside. I mean, a lot of these metals, it's only percentages. You're not even going to get a 1 or 2x out of these. Like, it's so pointless. Like, the opportunity level here is just insane. There's none. You're peaking in volume really hard, and really, I think this is going to turn into a bear div. So even copper doesn't look too great, but like, it doesn't mean like you can't do another 30%, right? If you're coming in with like millions of dollars, 30% is a lot. But like, if you're coming in with like $10,000, like $15,000, just buy something else. Buy something with dividends. This is kind of my thought process with Neo right now. I think EVs are suffering pretty hard. Not gonna lie, like a lot of these EVs look like shit. Somebody asked me about Tesla today. I think it's bad. I think Tesla's bad. Hopefully I don't get throttled on X for that, for saying that. But you got 1, 2, 3, 4 months of rejection here. I'll show you the same pattern here. Here's Bitcoin, right? Same exact pattern. 1, 2, 3, 4. Fifth month, you just puked. You get a nice little rally and then you puke again, right? That's exactly what Tesla looks like right now. Same as that pattern right here. Solana, I think, is close to a bottom. This is just me a little bit. I think like the lowest you're gonna go, to be honest with you, this is what everybody's thought process is, but really in reality, I think like bottom of wick candle here to at most it's gonna be right here. So I'm thinking like $80 roughly for Solana, and you can see it too on RSI here. You're basically bottoming in the same range. Now, if you break this RSI, you could definitely go deeper. And a lot of people are looking for a gap fill in here, right? But I don't know that you get a consolidation there. It's just hard to say. It's hard to say. I would say like you can begin bids around 80. Let this thing kind of consolidate. I think it's going to bounce. A lot of people are going to get hyped, and then it's going to run to the downside. So I think like it's like a cup, right? And then boom, something like that. That's what I'm looking for right now. I'm not looking for anything crazy. And then so likely to get a bounce up, retest the low just like oil did. I'll show you the same scenario here on oil. Basically, oil broke down, right? Big puke, broke out, retested, broke down, broke out, retested, but it's going to ultimately end up here. That's where oil is going to ultimately end up. So if oil did that, you know, it's likely Solana could do that too. Solana could sit there and play around for a little bit before it actually breaks down, consolidates this range, and then breaks down into this range. That would not be a bad thing, right? Now, if it played between here, then it could break down to like right here, right? If it played between here. But if it plays up here, it's likely going to bottom somewhere around here. RSI is already looking a little, you know, bottomy there. So bottom at $60. Yeah, I mean, there's a probability it can come back down here and revisit. I think 60 is the obvious range, but the reality is like this is where you got your first hesitation, and typically you'll retrace into your first hesitation. You don't necessarily have to gap fill because you already had prior price action to the breakout range, right? Which is all this over here. The only crappy thing about Solana is this, right? And this looks just like ETH. Like these things like go hand in hand. Like everybody memed ETH, but the reality is look at the top. Boom, right? Look at Solana. Same exact top. None of them broke out. None of them broke out. You could say, oh, it broke higher. That doesn't matter. It's a wick. Right. And that was with the president talking about it. Like, and dropping a meme coin. Like that's the best you could do. And then you got the breakdown, the rebalance, the breakout, and now you're basically just like, think of it like this: like you're in one big consolidation range. That's what you are right now. There's a bid down here, there's a sell down here, or up here. That's all it is right now. Nothing crazy. I think like overthinking this is just gonna get you to try and not bid when you get close to the low, and you're gonna sit there and you're gonna wait, and then you're gonna have to bid a lot higher than what you were originally anticipating. So I think like when you get close to your bottom targets, never look for exact target pricing. When you get close to your bottom targets, that's when you want to start bidding. You don't want to look for exact. So you get close to this bottom target, right? In that relative range, start bidding into it. You're not looking right now to get heavy returns. You're not looking right now to, do a 20x or 30x. You're looking right now to invest and then take out later. That's the way you got to think about this. So don't go in too heavy on a lot of your bids right now. Like, only bid what you're investing to take out later. And I'm talking like it could be like 8 months, it could be a year. Like this, it's hard to tell like where this will end, but typically these end at roughly in like the 10 to 12 month range, right? And I'll show you that too, because a lot of people think I just talk, but like I've done the due diligence here, done it. 396 days, right? 427 days, right there. 426 days, right there. And I'm assuming, right? Makes an ass out of me and you. Assuming 426 days. So if there's 396 days in a year, then roughly from the Pico top, it could be, 8 months to 12 months, or to a year and 2 months. But the hard part is gauging exactly where the top occurs, right? So I gauge it typically off the peak, right? Peak in the peak. Should have probably dropped in the white candle, but I put it over here. And then to trough. That's typically how I'm gauging these. And so let's say our peak, was relatively over here in October. And then we go to trough. Or we can gauge this from the first month we broke out, right here, which would be July of 2025. 1, 2, 3, 4, 5, 6, 7, 8 months in. If we're 8 months in from the top here, right? This was technically the top. If we're 8 months in, we likely are near a bottom for most things, right? Most assets in crypto. I'm talking about crypto specifically, obviously, right? We already went over dollar and oil, and we'll talk about some stocks too. Oh, the bottom range of which one? Of Solana? Sorry, I don't know why this thing flips this way. Let me see. I don't think I can flip the phone thing. Sorry about that. Solana would be relatively around $80 is my thought process with Solana. So it'll either be 80, and then if it breaks lower and other people are right and I'm wrong, then it'll be, relatively around the screen range right here, about 50. So could be 62. Could come in that way. But I think if you break down this range, you're gonna dip into this 50 range if you break this range. I think you'll dip into it at minimum. So like you could set bid orders there, right? You could set them at like I do like 90, 100, right? I mean 102 isn't bad either. Do like 190 and then like 80 and then like a stink bid probably around like 50. And for those who don't know what a stink bid is, it's basically you put in a bid into a range that you think is unlikely, but you just do a small amount, and if you do catch it, then you're good to go. Well, here's the thing. This is likely to play out faster than what most people anticipate, right? And if it is 80, then selling here to buy here is kind of risky. It's kind of risky. If you have anticipations of Solana recovering, I wouldn't worry too much about it. I don't think that Solana is going to zero. I don't think ETH is going to zero. I don't think Bitcoin's going to zero. Since these three specifically, if you're exposed to those, these three specifically should recover, and probably likely the next year, I would say. So the next 396 days, then I would just kind of hang in there and just kind of let this thing. I wouldn't sell at a loss, basically, right? On these three things specifically. Now, meme coins, those are a tougher call, right? It just depends on how bad you're down and what your position size is. Sometimes you just got to kind of hang in there, and then other times you just cut your loss. It's really hard to tell people like what to do in those situations when it comes to risky assets, because everybody's different, right? And it's all about your allocation. You should always be in any type of market. You should never be looking for a exact position to sell and an exact position to buy. You should be looking for scaling out and scaling in. In my opinion, obviously, right? This isn't FA, but it's like scaling out and scaling in is like the key to a lot of this. Like I wouldn't even, this cycle would have been really hard for me had I not been scaling out and scaling in. Like really difficult, because me scaling out of meme coins continuously and scaling into them has really helped me avoid some really big drawdowns, because like I scaled in at certain points and then I stopped scaling in, and then when it gets to a certain point I start scaling out. It just is what it is. And I think like anytime you start really breaking above previous all-time high with Bitcoin, starting to scale out makes sense, because you can typically scale back in cheaper than where you scaled out. I mean, almost every single time it's been like that. I mean, if you basically scaled in from, all the way up to breakout and then let this thing kind of run, you could have easily gotten back in below that point. I'm not saying sell everything here. Scaling in is putting in like, 10, 10, 10, 10, 10, 10, 10 until you're at 100% scaled in. And then scaling out is just, scaling out 12, 24, 36. And just keep scaling out. Oh, drop down. All right. Maybe scale out a little bit there. Oh, goes back up, scale out again. And then at a certain point, when you get back below your average, which should be pretty high, you start to scale back in. That's the ideal way to play this. And you should be doing the same thing with meme coins at this point. There is no buy and hold and shit anymore. Like it's the PvP has proven that, right? The PvP in this market has proven that. And that PvP has made me very sketch about holding anything. So I just scale in, scale out. And I've been very much more on the aspect of taking leverage, but more leverage on stocks, right? Stocks are just way too easy to take leverage on. Whereas like with crypto, it's a tough one, right? I feel like I got the soul long right. I did really well on that, but I think that was an obvious play. And a lot of people probably don't think it's very obvious, but the reality is, to me, it was obvious. You had a flush, you were building long, you're looking to go swing high to liquidate late shorts, and then you're going to dump. Take profit as you start to pump from that basic flush move. That's all it is. And even this flush, like this is a dangerous place to take shorts, because if the market maker wants to, and this could happen, right? They can rinse you again before they come back down and finalize this market. So you have to be really cautious right now with trying to take leverage, unless you're taking leverage in the right direction. And what is the right direction? Well, if you're at resistance, you should not be shorting into resistance, right? You should be shorting into, resistance. You should not be shorting into support. You should be shorting into resistance, right? You're currently at support. Support means you're above the line, right? Resistance means you're below the line. And when you're coming into, it's short. When you're coming down to, right? When you're going up to, it's short. When you're going down to, it's long. So this to me is a better odd scenario to long than a short, but you're looking to take profits along the way as it starts to pump, if it starts to pump. But right now, I would say to cut a short here does not make sense, right? Does not make sense. You're in the resistance range, not a place to short. And then on top of that, too, your RSI is very much probably bottomed, right? You're pushing into that low. You still have some downside you could see here, a little bit. But the reality is like if we're looking at previous cycle, this cycle, and this medium cycle, you're a little bit higher. So if they want to, they can pump and dump this again, and that'll wreck leverage. For now, what I would do is like I would be spot crypto, averaging down, and then for stocks, I'm going to look for plays to kind of play into. The Rivian play was almost perfect. And I had this up well before, and the people, because Bitcoin, they know this. I posted this down in this range, took longs around 1289. That's where the longs literal bottom tick, because I was playing off of the trend, right? They ran it all the way up to the high. Again, the flush move, right? Rebalance the flush, come back down to trend, likely going to play high again. I thought they would hold up here. I'm not going to lie. Like, I'm not going to be like, hey, I knew this perfectly. I didn't take longs here, but I kind of thought maybe I should, but I didn't. I was kind of waiting this out, and then they puked below the range. And now I'm like, okay, if I long, it has to be from this. It has to be from this. I cannot long at this point. I got to let this thing draw down more, because it's going to cause the sellers of those longs to start puking those positions, right? They're going to sell them for much cheaper, and then I can get them for really cheap, basically full reset on my long side positions. So for now, it's pulling back down. I know people were asking me about possibly rolling these longs. Yeah, I mean, rolling longs involves selling them and buying new ones. You're already at this point, and to give you longer dated, right? Your drawdown has to be crazy if you did any longs up here. But if you did longs basically where I got in, you're still in the green. You could technically sell these and buy them cheaper, in my opinion. But you should still be in the green. You shouldn't be at any loss if you got in when I got in. So, overall, I would say if you look at Rivian, it's looking pretty positive price action wise. You're basically coming out of the low. You're breaking out. You're not going to get super bulled up until you get above the 50. We've talked about this many times. You need to get above the 50 to get super bulled up. So if you're just looking for a buy, keep this on your watch list, but wait until you break above the 50, right? If you're looking to just bid for a long-term port, I would just wait until it breaks above the 50. I wouldn't bother with it until then. Right now, we're kind of playing with fire, taking leverage positions on it. But, it's one of those things that's been pretty fun. It's been a breakout. You take leverage, you take the profits, you break down, break out again, take leverage, take the profits, come out down. And then, hopefully we continue to keep getting this build long structure, because this is allowing me to accumulate a lot of cash. And then eventually I'm going to buy into the stock with the cash that I've earned from these short or from these long side positions. And then I'm going to hold those for a long-term port, because I think Rivian's a good company. I think overall it's a good company, has some good deals with Amazon and everything else. I've talked about it many times on stream. And I think overall it's a good company. Lucid, on the other hand, has been the biggest disappointment of all. I've lost a ton of money on this stock because I've only been bidding spot, and I'm absolutely wrecked on this position. I mean, nothing too crazy. I've just been averaging down basically since over here. But man, this has been the roughest stock I've been in. I just really hope they do something with this. I really hope that you got Saudi bids that makes you feel bullish, but it's been a rough one. It's been a rough one. Rivian's definitely the better of the two. I think like if you're looking for, I won't say the next Tesla, because I hate comparing car companies to car companies. But Rivian definitely has the better commercial deals, in my opinion. They have the deals with Amazon and other companies. On top of, they've also got a lot of good retail sales. I feel like retail loves their cars. They are nearly break even on their cars with the sales, but that's a good thing. It's a good thing for consumers, right? They're not trying to basically bend you backwards and take everything you got as a car company. They're trying to literally give you at cost cars, and they've been like that for some time. I mean, hopefully they start becoming a much more profitable company. But I mean, consumers do like this car. Neo is a Chinese EV for those who didn't know, so that's what I'm kind of bullish on too. And you can see here, like I've had this for a little while now. I'm expecting that PLTR is topped. I really think it's topped. And so, what does that mean by topped? You got a few ranges here. You're going to come back down to like 80, anywhere from 80 to all the way down to like 60. That's kind of your bid range. If you like PLTR, you think it's a good stock, this is where I'd bid. I think you're going to nearly fulfill the entire breakout range, which is crazy. Now, granted, this is something that I gave out roughly around like $9 to $13. $9 to $13. I was talking about PLTR. And so this was a really good play. You'll see it on my timeline too if you go on Twitter and just type in Rivian. You'll see at some point in there where I first started talking about this stock. So this has been a killer play. I do think people should take profits on it and either turn that into cash or flip it into another asset, at least until this kind of consolidates, right? Finds a bottom. Because I think you're still closer to a top than you are a bottom. And you can see the sell-off here has been huge. There's been, I mean, 86 to 96. That's why I tell people, I'm like, sell when you get from 86 to 96 on RSI. And they hit as high as 96. There was so much hype on this stock. You're going to reset all the way to the 50. Price is going to come lower. I'm not laughing like, like, oh, everything looks bearish. I'm laughing like it's just, we got in really low. We're going to make money and we're going to try and flip that money somewhere else to make more money. That's essentially the idea there. Neo again, this NVO. This is consolidating, and I was actually thinking we would come down. I think this range looks good. I like it here. I typically look at it like when you come into the previous consolidation, that's bad because typically you want to use that consolidation as support. But you are catching a bid here. You're also bottomed on the RSI, which is kind of crazy. You have a heavy spike in volume. I think Novo Nordisk is bottomed, bro. Like I'm at that point. I don't think that this is the case anymore. I think you're going to consolidate, and you can see I did give two scenarios here, right? I think you're consolidating. You're bottomed out. You got spiking volume. This is really good. All right, spiking volume is really good when you're coming into a puke. We did the same thing over here on Bitcoin, just as an example. So come over here, low end range, spike in volume on low end range, reversal, right? So I think that, looking at that and looking at the Nordisk, I think they're very similar here. Again, spike in volume, low in range. This is likely the bottom of this one. Even if it consolidates a bit longer, this could be good for a long-term port. Or if you get some kind of drawdown, take some long side exposure and look for upside. That's the way I'd look at this one. Nordisk looks really good for a bottoming structure. SUI, I think this one's a good one too. We are well below the breakout range here, right? I think you can come into, and we even broke our trend, which is big. And we're kind of holding the previous body candles, which is good. But I think it's going to be a trap move. There's a good chance they could push this back up and then run it back down. And I think this is where you're going to consolidate right down here. Not saying you couldn't bid into it here, but it's 50% drawdown if it does. But ultimately, I think that this is going to be a good one going into next cycle. I think they do a lot of things right as far as a crypto company, and they have a lot of good partnerships and stuff. RSI on SPY has been pretty interesting. So if we look at it overall, it was, looking pretty bearish. But we're kind of breaking out of that. But that doesn't mean that this is over. I do think this is a downtrend. I think we're slowly losing volume, but I think volume is going to ramp at the same time because this looks like it's circling out. If volume ramps, typically it's because of some kind of puke, right? Typically the volume ramps into the low end ranges. Right there, right there, right? And then over here, over here. So to me, I think SPY is going to get crushed at some point. You got really heavy volume spike here. And again, just, more spiking right here into this drawdown here. It's very obvious when you start to get these spikes, there's a heavy and heavier bid coming, and that it will not bid, sell. Sorry, sell. There's a heavier and heavier sell coming. The volume ramps are not because of steady flow. They're because of typical exiting. Usually you'll see a lot of volume ramping when you're going into bottoms or lows or puking more often than you'll see volume ramping at a high. So always keep that in mind too. It's really good alpha for that part of the conversation. We already looked at copper. Something I keep an eye on, but not bidding yet. I think volume is nearly dead on Workhorse, but you've been down here for so long. If you can hold an uptrend here, swing long, you're looking good. You could get a nice little spike, right? Like this. But I think at some point, this spike is going to get rebalanced, right? I think at some point, this is going to happen. So I'm looking, just like the same thing I showed you with Rivian, right? It was another one of those conversation pieces. I think at some point, we should look for a bid up to that range. Even if it's going to go lower, I think this spike is way too significant to leave that liquidity behind. And I think at some point, this is going to push up to this range. So it's not bad at the moment. Again, that's just a trade. I'm not saying it's like a long-term hold or any of that stuff. IONQ, big pukes, QBTS, big pukes. This is quantum computing, by the way. I think a lot of these are about to come down and reset. RGTI, QUBT, and you can see the levels. Like I have a lot of the levels already leveled out. You are setting on support here, but you could easily come back down into your beginning point. And then you can see right here, Defiance is starting to puke a little bit. QBTS, you're gonna hit probably right around here. And then if you don't stop, you're gonna come all the way down to like 9, right? Or sorry, 11. IONQ, you're already below the nominal range, which is basically right around 47.77. So, I mean, you're going to probably play into 36. You're currently at 39 and likely end up somewhere around 28. That's another thing, too. I think NVIDIA, man, like this looks toppy. I'm not going to lie. NVIDIA kind of looks like this. Like it wants to come back. Nothing too crazy. You can see it on the RSI too. RSI is very obvious. You got volume drop, right? And what did I say about volume spike? Volume spike is indicative of some kind of big pullback. I think NVIDIA is about to pull back big. Like if you want to take shorts, this would be something I'd be eyeballing. This would be something I'd be eyeballing the short. You've obviously been declining on strength. Your volume is nearly absolutely gone, right? You got almost no vol here, and you've been in a solid uptrend for years and years and years. So a lot of people say this doesn't make sense to short it here. I can tell you, like looking at vol, you're too crushed on vol that you're going to start seeing spikes, and spikes, again, we talked about it, are not good. That means profit taking. I mean, look at Norvo, right? When they started getting profit taking, boom, puke. But when you're peaking, and you've also been consolidating sideways, you found a bottom. This one I think is going to take a dump too. Zions. This is a bank. United Healthcare. Now, granted, keep in mind too, I want you to understand this because this is important to understand. all the things that are happening with healthcare right now are going to dramatically reduce the value of these stock companies. United Healthcare Group is going to get absolutely blown the hell out. Anything in the medical field is going to get blown out. And you're probably like, why? And I can tell you it's because of the health subsidies. Now, again, not political. I'm not getting into the politics of the situation. I'm just telling you the reason why these companies are going to likely come down and continue to come down in value. Because if they don't have those subsidies, their value to the investor is not as high as they claim it to be. And that's why you're seeing these big pukes kind of going into all of this. And it looks like it's going to continue to come down. Honestly, I think like 191. But if these companies get crushed, man, it's going to be bad. It's going to be really bad. Like you could be like $62 on some of these companies if they get absolutely blown out. I don't know if people are investing in these, but typically you'll see them sometimes in your 401k and stuff. I went through and played with my 401k and opted out of all healthcare groups. Like I'm not investing in them. I think it's a rough one, and it's going to only get rougher for the next at least couple of years till they get it worked out, right? Until they find a way to kind of offset this. They can do it through the current things that they're trying to do with give the people the money. They can do it through giving these healthcare companies the money. But I think like at the end of the day, they're going to come down in price. Oh, let's see here. Tesla, we already talked about. That's topped. Strategy is going to follow Bitcoin. Looks exactly the same. Look at the consolidation. Look at the drop. Look at Bitcoin, right? Look at the consolidation. Look at the drop. Strategy is going to follow Bitcoin. Whatever Bitcoin does, strategy will do. There's no point even buying strategy. Just buy Bitcoin. The price action is literally tied. Index. We already talked about Lucid. Oh yeah, Nike. Oh, I do think I think this is top too. I think Zcash is top. I think people if you're in that, I would take profits. We already talked about Neo, talked about dollar, talked about oil. Jupe. Yeah, Jupe looks like it's just infinite drawdown. You can see right here I had all this marked out. It's crazy. It's just been dropping and dropping. I'm looking for this to play out at some point, but just hasn't been there. We're still in that bull channel right now. And then somebody asked about hype. I thought I had a hype thing on here, but guess not. Oh, I did. Okay. Whew, look at that. Dang, they got crushed. Look at that. Came right down, filled it all. There's a bid in here. There's a bid in here at 20, but it just all depends. It all depends on this one. It looks like Jelly. Let me find that real quick. Actually, I'll just do this. Jelly. Oh. Very similar to Jelly. And you can see here, like they had a spike, then they had a flat, but they kept playing the mid-range here. See? Yeah, it's a hard one. I'd say, above the mid-range, you're not bad. But, like, this is a range coin. It's not doing much beyond that. It's almost not even worth playing into. But, yeah, we're reaching that 1 hour mark. I do have things I got to get to, but I wanted to hop on here since I just got home today and chat with you all. I hope this helps you guys get a better gauge on the market, at least for now. Again, nothing to be too fearful. Again, I think we're closer to a bottom than a top. Maybe a 10-20% more drawdown on Bitcoin. SPY is looking a little tricky. Might get a little bearish there. Nvidia is looking a little tricky at the moment. Dollar looks like, it's going to be coming down for quite some time. U.S. oil also looks like its prices are going to come down on the barrel. So, again, I think that bottoming price is around like 50 a barrel, roughly. That should bring asset prices up too, because delivery fees will go down, so on and so forth. The cost of delivery will go down. So, yeah, I hope this gives everybody a better gauge. Sorry, I've been MIA for a while, but we'll try to make these more regular for you all. And I appreciate everybody who showed up and came through. And I hope you all have a great rest of your week. And I'll see you guys later.